On this channel, most of my top stocks are companies with growing revenue, improving earnings, a decent balance sheet. I mean, when I went through my list to try to find companies that didn't fit this criteria, I circled Well Health Technologies because a little bit riskier for the next 12 months as they try to improve their underlying fundamentals. However, that's why you keep other lists of stocks. I do my research now looking for the next top stock, keeping other lists of potential stocks that are one or two things away from making it to a top stocks list, and sometimes some stocks that we just want to watch for a while and see what they do. When doing research on stocks, you can't throw out every company that you don't like today. You do have to look a little bit into the future to try to figure out where they're going and see, okay, where was the company yesterday? Where is the company today? Where are they going to be tomorrow? Are they trending in the right direction? Today, I'm going to introduce to you what I believe are the rewards of investing in this stock and the risks of investing in this stock. Today, I'm introducing Aurora Spine and Pain, simplifying the complex. Welcome to Common Sense Investing. My name is Cameron. Let's go find a great penny stock. Aurora Spine is an emerging growth company focused on bringing new solutions to the spinal implant market through a series of technologies, mostly that are minimally invasive. That's what they're looking to do, to be an improvement on the previous legacy technologies. And while I'm not a doctor and haven't used any of their products, I can at least get some social proof here with the company winning awards in 2022 for some of their technology. And they're going to need to win awards because unfortunately this is a very difficult market to break into. The market is growing by only 3% annually and 80% of the market is supplied by 6 companies. So to help alleviate some of that competitive pressure here in the spinal surgeries department, they've also expanded in mid-2020 into pain management. So while their impressive collection of spinal surgery technologies and products that they offer is continuing to grow, the recent company timeline is a little bit more diversified, which I like, talking about the new pain care division announcement here in 2020. But to be very clear here, the potential opportunity with Aurora Spine and Pain isn't just in spine surgeries and pain management. The real opportunity in this company, in this stock, could potentially be being an innovative tech disruptor, right? 80% of the market is supplied by 6 companies. Innovation comes from the other 20%. Aurora Spine is in that 20%. Successful innovators get acquired. So we have to understand this before we move on to the rest of the company and look at the numbers, because we're not necessarily looking at Aurora Spine and thinking it can become the next giant Amazon of the medical practice, right? We're looking at it. Are the products good enough? Is there enough product market fit to get this company noticed, potentially get acquired, and for how much? And you could see that in their news releases, where as much as the financial results are important, and we are going to look at those, you know, a lot of these news releases are initial implementation of their surgeries or products, working on more patents, new patents, second patent, attendance at different conferences, getting the name out there, getting their brand recognized, and putting out research papers so people understand what their products can do and put them on the map. The spinal surgery market, is a highly competitive market, but it has huge potential to get this company bought out by a much larger company. And their entry into the new emerging pain management market can help continue to grow this company while shareholders wait for that potential acquisition. More revenue, potentially more earnings. Can that be done? Because waiting for a company to get acquired is typically not what this channel is looking for unless that company is improving. Revenue trending up, earnings trending up, cash trending up. A company has to be well managed. So before I look at the numbers and try to figure out if it is or not and give my opinion, don't forget, not a financial advisor, definitely not your financial advisor. I don't give buy, sell, or hold alerts on any of the stocks that I cover. This is not how to invest. This is simply how I invest. I just like talking stocks. Make sure you go do all your own research because things change, numbers change. We've all went through COVID, as did this company, and as you can see, they struggled. So this is a good start to understanding Aurora Spine. As you could see, they started the company in roughly 2014. They saw significant revenue growth until COVID hit, where they struggled as hospital shutdowns, and well, you remember that whole thing, right? And coming out of COVID, I think this company can best be described as slow growth. So the past few quarters, they have been at around $4 million in revenue after spending a significant amount of time, closer to 3.5. They do have a net loss, not a net income, but it's very low, $222,000, $238,000, $200,000. So just below profitability. Good year-over-year growth here. This looks a bit more promising, but as you can see, they grew quite a bit coming out of COVID, and now they seems to have flatlined here. Current assets over current liabilities is okay. They do not have much cash at $367,000, but they've never operated with much cash here. They do have more receivables at $4.3 million over accounts payable at only $2 million, and they only have a current debt $270,000. So will they need cash in the future? I don't know, but at the end of the day, 8.5 million current assets over 3.5 million current liabilities. But at the end of the day, cash flows used in operating activities during the 3 months most recent quarter were only $125,000. So operating cash used wasn't very high. So do they need cash soon? Probably, right? Total cash pretty low here. Total debt $3.6 million. Operating cash flow trailing 12 months $474,000. So eventually they'll probably need some cash, but that's reflected in the share price. Going down from November 6, 2023, they were at 43 cents. Now they're sitting at 28.5 cents Canadian. And that would occur over top of their only 77 million shares outstanding, 57 million share float with about 25% insider ownership, which I know people like. That's a good amount. Add it all up, you've got a $22 million market cap company on top of trailing 12-month revenue of around $15.5 million. So look, I think that's enough information here for me to stop. This is an introductory video. There's a lot more research to do that I need to go do on Aurora Spine and Pain, that you need to go do on this stock as well. But I'm going to give my first impression, risks of this company and potential rewards of investing in this company. I'll start with the risks. And I think that's pretty clear to me, right? Slow growth, very slow growth recently. They have low cash. You combine those two things. Do they need more cash soon? Do they need a share offering? They're just unprofitable, which is both a green flag and a red flag. They're not burning a ton of cash, right? They're just under that profitability line. Any more growth in this company, and they should get there. They should become cash positive. They're only about $125,000 a quarter under that line. However, this is a challenging industry to grow in. Again, you're not looking to take over a massive amount of market share and grow quickly. You're looking to get noticed and potentially get bought out. So I have to wonder now, is this the timing of the inflection point? This company's been around since 2014. Are they getting close to becoming growing and profitable and or getting acquired? Now, there's advantages to being in operation for a while. They have an in-house manufacturing team, prototyping capabilities, an in-house engineering team, and every quarter that goes by, they continue to produce research and clinical studies and new patents for new products or existing products to hopefully grow their revenue and or catch somebody's attention to be bought. But there is risk with that timing, right? This company started in 2014. I'm now talking about them in 2024, so you need to be aware of that. Now, getting away from the negatives, it's always hard to talk negative about a company, especially a good company that is trying to help people. But as an investor, you do have to acknowledge that every stock, every company has some risks. And getting away from those risks, let's talk about some rewards. And there's lots of rewards. There's lots of things to like about Aurora Spine. Are they at that inflection point? As much as they've been in business for 10 years, I look at their growing list of products that they're offering, their growing list of patents. You can go look at their LinkedIn page. I will link to that down below, where they're talking about announcing a new product line coming up. This company continues to grow and improve and show the world, show the medical world that they can be of value. They are a disruptive tech innovator. And that means they're one product away, they're one company away from getting noticed and being at this inflection point. Now, while we're waiting for this, they're also frugal. They're not burning through $5 million of cash per quarter, $125,000 this most recent quarter, right? So they're managing their cash well. Their shareholders potentially have time. So they're a good company. I like investing in good companies that are helping people. I have to acknowledge that. As much as we all want, you know, that high-flying AI company, that high-flying AI stock, at the end of the day, that doesn't give me any kind of good moral feelings here for investing if it's not helping people. This is a company that is reducing pain and is helping with spinal surgeries. The other thing, major thing here, is that they're on the low cycle of their valuation. So in saying that they're one inflection point away from success or one product away from success has happened a few times. With their 5-year chart showing 3 to 4 major up cycles in share price, with right now being an obvious down cycle and a little bit of strength recently. So I have to ask the question, are people getting excited again? Where they're at an inflection point and we're going to get another up cycle here in share price and valuation, and or they get acquired. A lot of things to like here with Aurora Spine. I hope you enjoyed this video. I will be putting this company for now on my potential list, and I will continue some coverage on Aurora Spine and Pain. You've been watching Common Sense Investing. Thank you for your time.